Hello everyone, welcome to my channel. Today, let's predict the price trend of Nike stock. I am a swing investor, and I will not consider the price changes of a stock 1 month later. This channel only makes short-term price predictions for stocks, usually 1 to 3 weeks. Welcome to subscribe to this channel. Nike stock rose significantly last Friday, which shows that the market wants to push the stock price to a higher level. But the signal of capital selling during the day is very obvious. Since the stock price has risen to a certain height, the stock is currently facing the pressure of a correction. Some funds have withdrawn from the market to avoid the risk of a correction, but the cumulative outflow amount does not seem to be large. Technically, the stock is still in an upward trend within a small cycle. The stock price rebounded strongly after a deep correction last Wednesday, indicating that the market does not want the stock price to fall further, and the signal of long capital intervening in the stock again is obvious. So does this mean that the stock will rise further? Let's take a look at what happened to the stock in the past month through the 30-minute chart of the stock. We can see that the stock price fell sharply on April 3rd with a large trading volume, and then the stock price fluctuated violently, and the panic in the market led to a large number of chips being sold. On April 11th, the stock ended its violent shock, and the bottom of the stock price was finally confirmed at $52.20. The stock price rose significantly from April 21st to 22nd, but on April 23rd, the stock was sold off by bearish forces again, resulting in a correction in the stock price, but not much money flowed out of the market. This also means that the long capital that entered the market to take over the chips before has not yet withdrawn from the market. On April 30th, the stock price began to rebound at $55, indicating that the long capital that entered the market at a low level before is still trying to maintain the upward trend of the stock price, which is regarded as a positive signal. Although the stock price was sold off by bearish forces again in the area above $58 last Friday, I think this wave of selling may not last too long, and the bulls will not allow the stock price to fall too much. Let's take a look at the position distribution data of the stock. In April, the stock generated a large number of positions in the $52.20 to $59.30 area. The optimistic thing is that the current price of the stock is at the top of this area, which means that the bulls have pushed the stock price to stand firm in this area, but the pressure of correction still exists. In the past 2 weeks, the stock has generated some positions in the $54.70 to $59.30 area, and some funds have flowed out of the market, causing the stock price to pull back, but the stock price has been pulled back by bulls again in the past 3 days. This means that the chips sold in the market in the past 2 weeks may have been digested by bulls. We also see that the stock currently has a large number of positions distributed above $63, and there is still some space from the current price. Will the stock fill this gap in May? I think it is possible. Of course, $63 has become an obvious resistance position. In fact, the performance of the stock in the past 2 months is traceable. On March 20th, Nike announced its third quarter results. Earnings per share were 54 cents, higher than Wall Street's expectations of 29 cents. Revenue was $11.27 billion, higher than Wall Street's expectations of $11.01 billion. The company also reported net income of $794 million, or 54 cents per share, for the 3 months ended February 28th, compared with net income of $1.17 billion, or 77 cents per share, in the same period last year. Despite Nike's strong earnings performance, it was released on lower expectations and profits fell 32% from the same period last year. In addition, Nike also warned in the report that sales will fall by double-digit percentages in the current quarter as the sports shoe giant faces new tariffs, declining consumer confidence, and a slower-than-expected recovery. So after March 20th, the company's stock price fell further. The bigger blow came on April 2nd when Trump announced global tariffs. This included higher tariffs on several important footwear suppliers such as China, Vietnam, and Cambodia. These countries are exactly Nike's footwear and apparel suppliers. Especially Vietnam, footwear and apparel distribution account for 50% and 28% of the brand's global production. This also directly caused Nike's stock price to plummet 14.4% on April 3rd. But then Trump announced that he would reduce the reciprocal tariffs on countries that negotiate with the United States to 10%. The company's stock price then recovered slightly. Nike is well aware of the current problems it is facing and is actively looking for ways to deal with them, including buying back shares and launching new products, trying to regain investors' confidence in the company, but some problems still exist. Among them, tariffs are a very important aspect. The United States is more likely to reach a trade agreement with Vietnam and Cambodia, but the threat of tariffs still exists. If the two countries cannot effectively avoid trade transshipments that lead to a large number of cheap goods entering the United States, then Trump may consider restoring high tariffs on the two countries again. But if such a thing can be avoided, then the negative impact of the 10% tariff on Nike is limited. Another is the impact of China's weak economy on Nike's sales. Nike's sales in China fell 9% in the third quarter, but this decline may continue. Due to the tariff war between the United States and China, China's economy has accelerated downward. The continued decline in the high-end consumer market is obvious and inevitable for Nike's sales performance in China. In the long run, the company's stock price faces some uncertainties. So is there room for the stock to rise in the short term? I think it is possible. This is the option data based on the distribution of strike prices for Nike stock expiring on May 16th. It is obvious that call options account for a higher proportion of transactions. The strike price range with higher call option trading volume is between $59 and $65. The strike price range with higher put option trading volume is between $57 and $58. This is not much different from the current price. This reflects that most investors believe that Nike stock still has room for further growth in the short term. Let's go back to the daily chart of the stock. The stock fluctuated violently in early April and the trading volume increased significantly, which may be a signal that long capital intervened in the stock. The stock price rebounded strongly in the past 3 days, indicating that the bulls of the stock are still in control. But as mentioned earlier, the stock is currently at a certain height. If the market sell-off is severe, the stock may pull back again. But the stock price is not expected to fall below the $57 level. Even if it falls below this price, I think the bulls will block the bears above $54.70. Once this wave of selling is over, the bulls of the stock may further push up the stock price, and the target price may be $63. Okay, guys, that's my price prediction for Nike stock. Thank you for watching. If you agree with my analysis, please share it and subscribe to my channel, and I'll see you in the next video.